What's up, guys? I'm Kay Scholl. Welcome to another financial awareness video. So I successfully entered into and out of a trade the other week, and well, I'm not sure if I did the right thing or not. After hearing my story, leave a comment below and let me know if you think I did the right thing. I kind of have mixed feelings about it. I'm going to be sharing my journey trading penny stocks and would love for you to join me on this ride by subscribing and hitting that notification bell. All right, let's get to work. In a previous video, I shared my position with Opti, but only briefly mentioned Extreme. While continuing my due diligence and research on Opti, I kept hearing more and more good things about Extreme. So I decided to do my own analysis, research, and due diligence, which we'll get into in a minute. I ultimately, with my Extreme position, wanted to place my trade on Friday, July 31st, but that day I didn't have the time or enough cash in my trading account, and I didn't want to sell any of my Opti stock. So I ultimately ended up needing to wait until Monday, August 3rd to place my trade for Extreme. Little bit of background for context. For over 15 years, we've been investing in mutual funds and ETFs within several diversified portfolios, specifically for and within our retirement accounts. And we've been utilizing the traditional but boring dollar cost average investing method. And it's working out just fine for us, and we are continuing to do that with the bulk of our savings efforts in order to hit our long-term retirement goals. If you are brand new to investing, that's probably the best place to start, and don't stop. Keep going. Jumping right into penny stocks is pretty foolish. It's kind of like swimming with sharks when you don't even know how to swim. This new trading account for us is completely separate from our retirement goals. For years, I've been telling my wife I want to play the market for fun, and I'm finally doing it. Okay, so the trade, XTRM. This biodiesel company is no longer a biodiesel company, but rather the result of a reverse merger. What is a reverse merger? Many companies perform reverse mergers, also known as reverse takeovers, as opposed to other, more traditional forms of raising capital. A reverse merger is when a private company becomes a public company by purchasing control of the public company. The shareholders of the private company usually receive a large amount of ownership in the public company and control of its board of directors. Once this is complete, the private and public companies merge into one publicly traded company. So in the case of Extreme Biodiesel, you basically have a home builder in Boise, Idaho that was looking to raise capital without going through the lengthy 1 to 2 year process of going public. They wanted to quickly take advantage of the real estate boom in their area, which is consistently ranked in the top 1, 2, or 3 real estate markets in the country. And with the Fed announcing that they plan to keep interest rates low at least through the end of 2021, we can speculate that the real estate industry will continue to do well. We'll see. Now, I actually used to be a financial advisor for over 8 years. However, the 7 years prior to then, I actually worked in the home building industry for a national home builder. And for the 4 years before that, I was a finance and real estate double major in college. So I easily understood what North Star Homes was doing as they began working with Extreme Biodiesel. And as I started to piece these two puzzles together, it made complete sense in my head of what they were trying to accomplish through their reverse merger. The tricky thing about penny stocks is that you have to do a lot of DIY research and due diligence yourself, such as researching the ownership of the company, making sure the company is actually a real company and not some fake made-up address. I mean, take a look at the quality of some of these homes. These are absolutely homes I would want to live in myself. So regarding some penny stocks, be cautious. Much like how you are responsible for your own happiness, you are also responsible for your own due diligence. So act accordingly. I've slowly been getting plugged into the trading community on Twitter. There are definitely some interesting characters on Twitter for sure. Be careful of everything you read though, because sometimes people do have their own agenda that they're trying to push. But every now and again, you'll come across people that willingly share their due diligence in order to help you make up your mind. Big shout out to Uncle Billy. All right, back to the trade. I'm continuously trying to learn more as a trader and applied more technical analysis this time than with my Opti trade. I waited for confirmation above the SMA, and although I did want to place my trade on the 31st, I had to wait until Monday the 3rd. I held for the first couple days until I saw it getting a little too close to the SMA for my comfort. This all happened so fast within 2 trading days. Nearly a 300% profit from where I started, bought in with $9,000 and saw this one jump to over $24,000. So I sold about half my position and pulled $12,000 out of the market. We allocated $2,000 for short-term capital gains tax, which has already been transferred into our tax account, kept $1,000 to pay for all this new recording equipment, and now we have our net after taxes $9,000 original investment back. Yup, that's right. Within 24 hours, I had made enough money to pay for this new microphone, that light, these 2 new tripods, and several more acoustic panels so that your experience watching these videos can be at a slightly higher quality. We're still sitting on 475,000 shares, but what's frustrating is that in hindsight, we should have sold all of our shares instead of only selling half of our shares, because since that time, the stock price has come all the way back down to where we bought it for about a penny a share, if not a little bit under. So had we sold out of all of our position, we would have had a larger profit, and then we could have taken some of our gains and bought back in at a penny a share. But that's the risk of trading for you. Coulda, woulda, shoulda. Everything's 20/20 in hindsight. Although technically we still have some basis left in this position, to us emotionally, it's basically all profit. Literally playing with house money with this position from here on out. So we'll see where this one goes. Okay, so what do you think? Leave a comment below with any tips for swing trading penny stocks or what you think I should do next. If you haven't subscribed yet, please do. Would love to have you follow me on this journey. Hopefully I don't blow up this whole account. There are so many ways my wife and I try to save our money. Check out this video right here. Or, I don't know, you might like that one instead. I appreciate your time. See you in the next one.